Tesla's latest earnings report is a real head-scratcher. It's a total paradox. On one side, you've got record revenue, but on the other, plummeting profits. So today, we're going to crack open these Q3 2025 numbers and try to figure out what's really going on. Is Tesla a car company in trouble, or is it secretly an AI company in disguise?
Okay, let's just jump right into the big puzzle. So get this. Tesla pulled in a record revenue, up a very healthy 12%. Sounds great, right? But, and this is a big but, their operating profit absolutely cratered. It's down a staggering 40%. So way more money is coming in the front door, but a whole lot less of it is actually sticking around as profit.
So you have to ask, what is going on here? How can both of these things be true at the exact same time? It just doesn't seem to make sense on the surface.
All right, to solve this mystery, we're going to do what you always do. Follow the money. And our first stop is the income statement. That's where the story of this shrinking profit really starts to take shape. You know, the main reason for this profit squeeze, well, it was a deliberate choice. Tesla has been on a price-cutting spree, slashing prices on its cars. It's a classic business move, really. Go for volume over margin. The idea is to sell way more cars, even if you make less money on each one.
And if you want to see the impact of that strategy in a single number, here it is, 15.4%. That's the automotive gross margin, basically the core profitability of the car business, and man, has it been squeezed. This right here, this is pretty much the smoking gun for that profit drop.
But, you know, it's not just the price cuts. It's kind of like a perfect storm. While the margins are falling, Tesla is also pouring a ton more money into R&D for their huge bets on AI and robotics. On top of that, they're getting less of that free money from carbon credits, and, oh yeah, they're facing some absolutely fierce competition from companies like BYD, Ford, and GM. Everyone wants a piece of the EV pie. Okay, so if Tesla's profits are starting to look like a normal car company's, why is its stock valued so differently? I mean, this is where things get a little wild. The market is valuing Tesla at a PE ratio that is just out of this world compared to its competitors. We're talking more than 10 times higher. This is a huge clue that investors aren't really looking at Tesla as just a car company.
So with profits getting hammered, you might be thinking, is the company in danger? The short answer, not at all. And to understand why, we have to look past the profit numbers and dig into the cash flow statement, because that's where you find Tesla's real hidden strength.
I mean, just look at this chart. It says it all. For the quarter, Tesla reported $1.4 billion in net income. That's the official accounting profit. But the company generated a whopping $6.2 billion in actual cash. That gap is just massive, and it's absolutely crucial for understanding the company's true financial health.
So what even is operating cash flow? Well, think of it this way. It's the ultimate reality check. It's the raw cash that a company's main business actually brings into the bank. You know, profit can be an opinion, but cash is a fact. And for Tesla, that fact is an incredibly strong number.
And all that cash has to go somewhere, right? Well, it goes right here. Tesla is now sitting on a record $41.6 billion in cash and investments. This isn't some company struggling to make payroll. This is a company with a massive war chest to go after whatever it wants in the future.
And the rest of the books tell the same story of rock-solid strength. Their debt is super low, they actually sold more cars than they made, which cleared out inventory, and, after digging through, we found no signs of any funny business with the accounting. The foundation here is absolutely solid.
Okay, so we've got this puzzle, right? Weakening profits in the car business, but a ridiculously strong financial foundation. This brings us to the motive, the grand strategy that really explains everything that's going on. Tesla's colossal bet on an AI-powered future.
And this quote just hits the nail on the head. The market isn't really valuing the company that's making cars today. The real investment idea, the thing justifying that sky-high valuation, is a massive bet that Tesla is going to become a dominant force in artificial intelligence and robotics.
This chart makes that idea crystal clear. If you break the company down into its different pieces, the core auto business, the part that actually makes all the money right now, is only about a third of the company's total value. The biggest slice, almost half, comes from all those future bets on AI and robots.
And looking at it on a per-share basis tells the exact same story. The businesses that are actually making money today, cars and energy, make up about $250 of the stock price. But the market is tacking on another $200 per share just for the promise of things like full self-driving, robotaxis, and the Optimus robot.
So let that sink in for a second. The crucial takeaway is this. More than half of what the market thinks Tesla's worth is tied up in projects that are making almost zero money today. It is all about the future.
So, let's tie this all together. What's the final verdict? Well, when you really look at Tesla, you realize you're analyzing two totally different companies that just happen to share the same stock ticker. See, on one side you've got Tesla, the car company. It's dealing with slower growth, shrinking margins, and a ton of competition. But on the other side, you have Tesla, the AI company. And that company is all about high risk, massive potential, and a business model that is almost completely unproven. And that AI story carries some huge risks. I mean, what if the profit margins on the car business keep getting squeezed? Or what if those big AI projects get delayed again and again? The whole AI narrative can just fall apart, and suddenly investors are left holding shares in, well, just a car company. Which leaves us with the one ultimate question that will define Tesla's future. Can the incredible cash flow from the car business, the business with the falling profits, keep funding the incredibly expensive AI dream long enough for that dream to actually become a reality? That, my friends, is the multi-trillion-dollar question.